Edelweiss and CNBC-TV18 present Change India, What India Needs.
This issue of assets under management in 2008 till today have hardly gone up by, say, at lower than the rate of inflation. Whose fault is it? Is it the industry, or is it regulation? Is it the lack of distribution incentive? How do you get the money into funds?
Definitely needs some fiscal incentives. World over, you look at any country, I mean, there has to be fiscal incentives. So I gave the example of 401k. So from your pre-tax income, I think something gets cut. Your employer makes a contribution, directly goes into equity for a very long time, or long-term bonds. You need to increase the awareness.
So 401k in India, what would you say? Pension fund
some
investing?
kind of a pension plan, long-term pension plan, where there could be an aggregator who collects the money, he gives to managers like us who manage the money, and then at the end of the retirement, I think we can buy an annuity from an insurance company, and the whole ecosystem works like that, make it very cost effective, but take a longer term view, and there has to be some fiscal incentive and
no paperwork for
the overall environment.
And
yeah,
no
exactly.
paperwork for me.
And make it as simple as possible that anybody can invest. Also, I think need to invest a lot more in the awareness in India. As Nilesh rightly said, that people consider equity as a very risky. The fact is that 10, 15, 20, 25 years, if anybody invested in my fund or anybody else's fund, I think they would have got high teens, 18, 20, 25% CAGR over the last 20 years. But what happens that because we had those bursts of the bull market in 85, 86, then 91, 92, and then 99, 2000, and people came at the fag end of the market, didn't make money, and the perception that you don't make money. 2003 to 7 was a long-term bull market. So of course, like US, you need to have that long period of non-inflationary continued expansion where books were written like stocks for the long run. It went to people's psyche, just like the psyches today is that gold and real estate are for long run. You need to change that.
But I have a slightly different take on this issue. I think as a country, we have currently a per capita income of something like $1,200, $1,250 a year. And at that kind of an income level, the number of people who have real need to put money in stock market, particularly in equity market, I think is very, very low. I don't think equity comes as a natural instrument of choice for these people.
But why should, because equity at the end of the day is a hedge against inflation, if you really look at it as a...
Yeah, but I think the volatility of equity can be very, very demoralizing there. I mean, it's very good to say 20, 25 years. But the fact is, when I start to put in money and I start to see my wealth getting eroded by 10, 15, 20%, it does take a toll. The thing is there a need to bring in instruments which fit somewhere between equity and debt? It is a little dramatic to say that, but because I have not seen many countries very successful for that. But for a country like India, I think special incentives like tax breaks or capital guaranteed kind of products over a 4, 5, 10-year kind of a period, I think that is what will actually incentivize a lot many more people to come into these kind of markets.
Okay, would you agree that you need a halfway house, incentives, a hybrid instrument, or do you think get inflation down, everything is sorted out? You get inflation down, interest rates are down, it gets...
Yeah, we have seen that phase where we had a problem of too much money in the market, right? And that time, we had actually low inflation and decent growth. So I think as soon as we return to that era, this debate about money supply will be over, except for the long-term money. I think the long-term debt still is an issue, and for infrastructure, we do need long-term capital, and we don't have debt markets to support that. Currently, because inflation was high, real estate and gold was perceived as inflation hedge, so a lot of money went into that. And if I put money in fixed instruments, I didn't even get compensated for inflation, forget about any return, any real return on that. And equity markets were volatile and very risky, right? So, and the growth was also sort of coming down. So as soon as we change the growth scenario, which hopefully will change soon with proper governance coming in, then I think we can go back to the era where we'll have to worry about more money coming in than we can handle, frankly speaking. Biggest impediment to investment is perceived risk. So when the governance goes down, your perceived risk suddenly goes up. Okay. When foreign investors suddenly lose 30% of their value just because of currency depreciation, your whole faith gets lost in the country. And any regulatory issues that you can have a retrospective change in policy, the foreign investors lose faith that if you cannot know under what policy, under what rules I'm investing, how can you invest? So I think the first and foremost is consciously we have to think about how do we reduce the perceived risk, not just the actual risk, the perceived risk.
How much does the perceived risk come down with the new government relation? I've just got a number that the number of companies that raised debt in the first 6 months, I think it's almost as much as they raised last year, $13 billion.
So I don't have the global numbers, but I have the local numbers, where every single listed multinational subsidiary company has outperformed its parent by a multiple time in US dollar terms.
Okay.
So whether it's Hindustan Lever versus Unilever, P&G versus P&G, Nestle versus Nestle, Siemens versus Siemens, Maruti Suzuki versus Suzuki, the experience of Indian multinational listed company outperforming their parents by a mile in US dollar term is present.
Okay.
So this is something which we need to convey to the investors that, look, by putting up a company over here, you have created huge value. And that value creation is significantly superior to what you have created back in your own country. Then second, as Akhil rightly mentioned, that I also need to reduce that perception of risk. Now this is all related to how do you invite the guy. And having worked in a multinational company, this is a simple experience. One of our fund manager, when he visited Turkey, the finance ministry of Turkey will send a representative to ferry him from the airport. He will receive a red carpet treatment. When he came to India, the immigration itself was so difficult, and he'll carry passport with 400 pages, he'll be asked to find a visa. I mean, the entry point, at that point of time, only the investor will be coming with negative perception. I mean, when the person, FII is coming into India, will he get clarity in terms of taxation treatment? Will he get clarity in terms of how he can bring in money, how he can take out money? Will the regulations remain stable? So on and so forth. The other thing is also the celestial combination. Today in Russia, investors will not go because of Ukraine crisis. In Turkey and Thailand, there are political reasons to not go. In Indonesia, there is a political revival, but again, people will see how they deliver before putting in the money. In Brazil, there is a weaker macro. In China, there are worries about credit growth. Effectively, India is the only country where people will be happily cutting check.
Will we blow it, or can we? Do you think this government can go out and actually make that lovely combination of stars work for us?
So, I mean, putting it in some other words, I mean, there are countries in the world which are determined to grow, but we are destined to grow.
Okay.
Honestly, now we have a leadership which will ensure that we have a determined leadership as well. So, I mean, that's a great combination. I think we've got the nice framework in place for a concoction in place for a long-term sustainable market. What do you need? You need a stable macro environment for next several years. I think we've got that. The twin deficits are behind us. I think this government is committed to fiscal consolidation, and you have a central bank governor, I think, who's who'll ensure that the way currency is managed, or in terms of, the CPI targets. I think the bad combination of, higher inflation, lower growth, I think for next several years we'll have rising growth and then declining inflation. So overall macro environment looks quite decent for next several years, and then also, that would be the result of stable political environment.
Before we end, 1, 2, or 3 points, action that you'd like to see from the government to make that will tell you that yes, their intent is serious.
I think first is clearly that they have to tackle the inflation, right? And second, I think they should set up a body to say, let's look at all the regulations that we have, examine them from first principles, and see which archaic regulations we need to get rid of, right? And the third thing I would say, I think we should invest big in solar, because solar displaces energy in the peak side when you're displacing diesel. So we can have at least $50 to $100 billion worth of investment in solar, and you get a guaranteed return. You borrow money at 4% debt, because Chinese or Japanese will be happy to give you debt against the panels that you buy, and you get 18 to 25% return on your thing. That helps your current account deficit, that helps your energy deficit, and that will help your impending capacity issue that you will face a couple of years from now.
Change the mindset that equity is risky. No. Not investing in equity is risky. Let there be a conversation where a son actually tells his father that you sold Wipro in 1990 and that's why I'm staying here, otherwise I would have been there. The second thing is simplify. Today, if a person wants to come into financial markets, he goes through various level of processes. Those processes needs to be equated with when he's entering into non-financial market. The third thing is incentivize. When eventually financial products are sold, and if you don't have distributors who are adequately incentivized to sell that, you are unlikely to get the last mile connectivity.
How about you?
The government needs to focus, I think, a lot more on the execution side. So for ease of doing business, they need to have the right policy framework, you need a right taxation regime, you need a retrieval mechanism, and you need to have the right clearances and the execution in place. That will ensure that both the foreign investors and the domestic investors will have a lot more confidence. Look at the balance sheet of the government, look at the balance sheet of the banking sector, look at the balance sheet of the infrastructure developers. You cannot develop the infrastructure, the need that we have, unless you put this ecosystem in place of the ease of doing business and the way to funding it, the way of funding
So,
it.
deepening the financial market, both of you were talking about it.
Yeah.
How much can industry do? Why is it that, say, an Airtel or a Vodafone have been able to go and sell so many SIM cards, but the mutual fund industry hasn't been able to go all across the country? What has been the,
So several
what's
things
been the
that,
big,
that I talked about,
impediment?
whether it's the fiscal incentive, whether it's the kind of the awareness, the simplification,
Okay.
KYC and all that, and the ability to reach out, as I rightly said, I mean, the funds are pushed. I mean, it's not that somebody is coming to you. People go to, let's say, Vodafone and ask for a SIM card. Nobody comes to my shop and say that I want to invest in Magnum Equity Fund. I mean, somebody has to go.
No, I'll just add on to that point. Actually, it's very interesting that we talk about, you know, mutual funds, but you just see what has happened in the insurance industry. There you don't see so much of an issue in terms of penetration. The reason is very simple. You've got maybe 15-16 lakhs of people who are actually distributing that product. You've made the
You've incentivized the
you've
system.
incentivized them, and you have not choked them with a lot of regulations. The other issue that I face in terms of this intermediary ecosystem is people don't get respect. Somehow it's a very unique situation where brokers or small time distributors, they don't get the kind of respect that they deserve. They're always seen with this, you know,
Eye of
suspicion that, you know, they might missell. Yeah, of course there would be some people who would do that, but you need to incentivize and give them a little more.
Make regulations that are done through the baby out of the bathwater.
Yeah.
Gentlemen, thank you so much for joining us. We could go on. Thank you so much. And that's all we've got time for in this edition of Change India. We'll be back next week.
Edelweiss and CNBC-TV18 present Change India, what India needs.